Hello everybody, very busy today, so just a short video. The beauty stocks round 2, and this video was inspired by one of my commenters who's been asking over and over and over again that I cover Olaplex and Honest. I pray every day that you cover Olaplex and Honest, and I guess I'm gonna grant that wish because that was a lot of comments asking for these two stocks. So I'm gonna cover them. And it's one of the things you got to realize is that, I try to understand so many sectors. The thing about the beauty sector is that I am no expert in the beauty sector. I understand Oddity. I think I have a pretty good understanding about Oddity, right? Odd, the ticker symbol odd. Oddity is AI, it's makeup, it's scanning someone's face, getting the right tone, putting it into a foundation, shipping the foundation. It's app-based. That I think I fully understand. Inmode, I put Inmode into the beauty stocks, but frankly, it's kind of like a hybrid in between a laser procedure. It's more than a laser, less than surgery. Inmode, if you're not familiar, they have it's called a micro needling. It's kind of a needle gun that melts fat. There's no way to say it. It's a highly profitable business. Excellent gross margin at 82%. Expensive machines, $80,000 machines that you sell to more advanced kind of like mini doctor's office or mini cosmetic doctor's office. Procedures cost $7,000-$9,000 and you get 10, 12, 15 sessions with this micro needling gun that melts fat. That's the Inmode business model, and that business model, of course, is a business model heavily based in consumables, because those micro needling heads, you need to throw them out. The doctor's office needs to buy a new one. You make a bunch of money when that happens, so the business doesn't really need to sell that many growth machines. Anyways, Inmode, the growth has stalled because of interest rates. So Inmode I own, but it's a small position. The bigger position that I have in the beauty space, and you could round the numbers, essentially say my only position in the beauty space would be Oddity. I guess I have some Inmode too. Oddity and Inmode. Oddity is kind of the company that I find compelling in the beauty space. Elf, eyes, lips, face. So this is a Gen Z, a Gen Z makeup brand that was originally targeted at teenagers, and of course the teenagers got older, and of course they stuck with the brand. This is ELF. I'll mention one thing about ELF. I went to Target the other day. I had no choice. It was closer than Walmart. Anyways, I had to go to Target, and I was like, okay, let me check out ELF. Well, I understand why they have so many sales at Target, because they literally own Target. Just so you know, they got a lot of products. It's inexpensive makeup. I could see that one be compelling when I look at the numbers. It's just that how many beauty stocks do I want, right? How many beauty plays do I want? So before I get into Olaplex and I get into Honest, let me just say that I'm fine with just one beauty play. My beauty play is mostly Odd, a little bit of Inmode, but I'm in Inmode because I bought it a little higher than $16, right? I bought it at 23, 22s. I'm down on the stock, but I'm not gonna sell. I'm gonna hold it. Now my new buys, if I'm in the beauty space, they're gonna be towards Oddity and their makeup brand, MAKIAGE. That's what I'm going to be focusing on. With that in mind, let me go towards the subscriber stocks, OLPX and Honest, where that subscriber prays every day that I cover them. So I'm going to briefly cover them, and hopefully I'll get to cover many more subscriber stocks. Not a deep dive, it's an overview, right? But I'll do some Build.com. I had someone on the channel Discord talk about that one. California Nano, that's another one that I found very interesting, although I can't figure out the growth numbers on that one. Let me cover Olaplex. Let's go with Olaplex. So Olaplex used to be a SPAC, SPAC at $20. Of course, the stock took a major dive, is now trading, $2, and it was a stock that's about hair care, and of course I am no expert about this. That's kind of a problem. I see my limitations here. It's like, how can I judge that this hair care, hair maintenance, bond maintenance shampoo is a good product or not? I'm never going to use that. How can I judge that? I have a hard time judging that. I can't tell you if it's a good product or not. What I can say is that neo brands are a thing. Old brands whether it's in the shampoo space or whatever, old brands are on their way out and they're getting replaced by a lot of newer brands. This is the theme of Olaplex. This is the theme of Honest that I'll cover in the song. These newer brands are taking over the old brands that were established in the era of TV advertising. And today, new brands emerge because there's not that barrier to entry in advertising anymore. You don't need $5 million to do a TV campaign for shampoo anymore. You can leverage social media. You can leverage all of the new channels that we have accessible these days, and when you leverage those channels, you can create a new brand and take down old modes. So that I fully understand. I can't judge the product. This is my problem here. But what I can judge is reviews, and when I look at the reviews of the Olaplex product, I think the reviews are pretty good, right? 5.5, 4, 5.5. Okay, these are pretty good reviews. I guess 4 out of 5. I guess I would want a product like that to be 4.5 out of 5, I suppose. But the reviews are pretty good, although I can't judge it. What I can tell you is that the stock is down because of apparently a $75,000 lawsuit that started a social media kind of, craze, kind of anti-Olaplex. And, the question is, this was the Ulta, the Reddit of Ulta. Who would figure that they have an Ulta? Anyways, some people may have used the product in the wrong way. Some people who didn't need the product ended up using the product, or something like that. It's a quote unquote technical point that I don't really understand. So I'm gonna stay out of that one and withhold my judgment. I will tell you that the EBITDA margin is excellent, and they do know that, because when you go for the investor presentation, one of the things that the CEO, she's quick to point out, the CEO, that the EBITDA margin is excellent. And yes, I agree that EBITDA margin is very good, 34% for a newer company. I want to be in the shampoo business too. That's a really good EBITDA margin. The gross margin is also excellent at 72. Great business to be in. Unfortunately, because of that, some of those reviews, they've lost sales, and they're predicted to drop their sales, which entirely puts my framework out of whack. I can't use my framework if you have declining sales, and analysts are saying sales will decline by 12%. So this company, for me, if I am to revisit it, I need to see 30% revenue growth. It's a clear turnaround story. Yes, there are room for new brands in all spaces of beauty. But as far as beauty goes, my pick is Oddity. That's my pick as far as beauty goes. And of course, it doesn't achieve a rule of 40, right? And Oddity achieves this. So does e.l.f., right? e.l.f. achieves that too. e.l.f. is cheap right now, by the way. Okay, so Olaplex, done. Let me go through Honest, and Honest is a well, it's not a similar story, but it's a lower growth story again. 7% doesn't get me excited. Inmode, of course, 1% doesn't get me excited, but keep in mind the reason why Inmode is not growing is because of interest rates, right? I don't think interest rates are going to have any impact on the growth of selling diapers. I think selling diapers, the impact is astute marketing, how good you are at marketing. What I don't like about the diaper business, and of course I know it's not just a diaper company, they also have a wipes brand, and they also have some skin brand, I know, but it's 63% diapers and wipes. So I guess I'm going to call it that. I'm going to call it a diaper company still today, because it's roughly 2/3 of the business. I'm not sure it's a business that I want to be in, because demographics are not in the way of more babies, right? Demographics are in the way of fewer babies. And so when you're going through a trend where demographics are not working in your way, at least in the US, right? If you were in, well, I guess there's not a lot of places like that in the world where there's a very high birth rate. But if you were still in the heyday of a bunch of new births, then yeah, by all means, be in the diapers business. But the joke about the diapers business is that in Japan, they apparently sell more diapers for the elderly than they do for the youth. And so, again, do I want to be in the diapers business? my answer to that is no, and it's nothing against diapers. It's just that I don't think the demographics are favorable for that business. I think in 10 years there will be less diapers sold and not more diapers sold, and so you're taking a share of a very big pie, but the size of that pie is declining. That's point number one. Then, of course, this company was founded in 2012 with the idea that you need to use better ingredients, and they have this nice chart in the presentation where they show all of the things they don't have. No this, no that, no this, no that. They remove a lot of bad ingredients. Yes, it's a major trend in health. It's a major trend in what is it? I remember a few years back you had organic cotton. That was another thing that was a big trend. Yes, it's a big trend. It's important to the consumer. The consumer is obviously not the customer in the case of diapers. The customer cares. The mom doesn't want to buy the low quality diapers for their children. They want to buy high quality diapers. I get it all. I just don't get excited to the cost of growth. How much am I paying for that growth? I'm paying a 0.44, right? I can get Oddity at a 0.13. I can get a HIMS at a 0.07. In the DTC space, in the larger direct-to-consumer space, which is where I put this space in, it unfortunately doesn't get me excited. I think the valuation, although on the surface that valuation may seem a little cheap, I think it trading at about 1x sales roughly. I think it's actually fairly expensive because of that growth, right? That growth is not very high. The EBITDA margin is negative. That doesn't help. It achieves the lowest rule of 40. I wish these companies well. I hope they're able to disrupt. They are definitely at the start of disrupting giants. But for me to get excited, I need to be closer to that product adoption phase. And I think either Olaplex or Honest have not gone through a explosive product adoption like a company like ELF, for example, ELF has gone through. And this is why I would stay away from these. But, good luck. And I may be missing something. There's a lot of things that I may be missing in these analysis, but you would find what I'm missing, right? You would find whether Honest is really the best product or whether Olaplex is really the best product. You would find that by digging deep into the granularity of the thesis, into the components, the very deep components of the thesis. I just don't have time to dig deep enough to find the one thing that's going to justify why I should own this stock, and that's why I'm out of these stocks. But I thank you for suggesting these stocks. Again, this is not financial advice, no investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you so much for watching and have a wonderful day.